Hey everybody, it's Brett. Just wanted to give you guys a quick market update and a bit of an urgent warning to be watching out for as we go into Sunday. So with that, let me pull up some charts and I'll go ahead and show you what I'm talking about. So the IBIT here, just take a quick look at this, is drifting down into a new trend channel and losing that key $38 level. The IBIT I've been using as a bit of a leading indicator, and as we talked about in previous class, watching this all the way back here on the 4-hour chart, all the way back when they first came out and dipped down below this area and first broke out of this cup and handle pattern back here in February of this year when the IBIT first started trading. So we saw that breakout, came up, consolidated for a bit, pushed up again, and sort of had some trouble in this range. We'll look at this on the Bitcoin chart as well. Do want to talk about the DXY briefly, and just to open this up a bit, the DXY, you know, we were in this downward trending channel here. I thought we would keep going lower into Bitcoin rally zone, as I have marked down here, but because of weakness in other currencies, relatively the dollar is becoming stronger, and pushed up to this 105.5 level, which I've been watching very carefully. So fortunately, the DXY pulled back down below that, and I've got a question mark here signifying, do we continue higher on the DXY, which would likely see further downside on Bitcoin, the total market cap, and I do think that is incoming based on some signals and setups that we saw. The last time I saw these was when the 2021 market top was in. So I'm not saying we have a market top or that's the top of the market cycle, but it's worth paying attention to, and I do think we have some further downside. And so I have this labeled as Bitcoin correction zone. So just jumping out of there, jumping over to Bitcoin here on the daily time frame. That's a little clearer on the weekly, which we'll get to in a minute, but you can see that clearly we've been in this downward trending channel here, and to some degree it's a bull flag, and once we do come out of this range, the measured move on this bull flag here, if I just draw this a little bit more clearly, and this being the flag, and the flagpole over there, the measured move on that takes us to, if we draw that out and extend it around here, takes us up around 100,000, which would make sense. Would make sense to push up to 100K when we get the bounce, but we're not quite ready to get there. So here is a daily chart drawn a little differently, again with this a different, more steeper downward trending channel. Now breakouts usually happen on the 3rd or 5th attempt. It's just been my observation over the years, and you can see I have this labeled Bitcoin breakout attempts. So we failed here on the 3rd attempt and the 4th, and so we were coming down. The scenarios that I have drawn here are either we do hold at this level, which is the 66K level, and on a monthly time frame and a weekly time frame, rather, it is holding there. However, stay with me because there's some troubling signs ahead that we will drop lower. So I'm thinking we probably will come down and we'll lose this 66K level, come down to this order block here, which would be around this 62K level, all the way from 60 to 62K level. It's also where the bull market support band is. And so if I just draw that, turn that back on there, you can see this is kind of as this smooths over. Now, we don't want to lose the bull market support band because then usually we're down below it for 8 to 12 weeks. And so the best scenario, ideally, is we push higher sooner. But actually, I would prefer we come down lower and have a deeper bounce, because what's happened is the cycle, we got ahead of ourselves in the overall cycle here, and we're expecting a left translated cycle, you know, but for us to get back on track for the 4-year cycle and slow things down a bit so that we can push much higher into 2025 really benefits everybody. So this is a bit of a forewarning video just to show you that we could go lower in the short term. I'm trying to drag this trend line and get it out of the way, but these things are tricky to pinpoint exactly, just to clear this up. Okay, so scenario one, we sort of stabilize here, we push up, we break up to new highs, and then we'll see where things go. I kind of would rather see us jump off the roof, off the trampoline, you know, off the roof onto the trampoline. The farther you fall, the higher you bounce, right? So down in this 62K range, you know, if we lose that, I do think we go down to the 58K range, and you can see these buy order blocks down here. Below that, we could also fall down to the 50-week EMA. And just if I turn this on here, on a weekly time frame, that becomes more clear. So I could jump over it and show you this. So because this is a bit jumbled though, let me hide all these other indicators and just bear with me because I'm going to show you why I'm concerned about this weekly chart if we don't close higher on by tomorrow. And depending when you're watching this, I'm recording this Saturday evening, probably won't get it up till Sunday morning. So Sunday close 8 p.m. Eastern, we want to see where we land. Okay, so essentially the prior market cycle high, and there's a couple of things that line up with confluence, and that's why I'm concerned here a bit. So looking at this, we have a bearish engulfing candle, and okay, it's going to turn these things back on if I click on it, but that's fine. So basically, the bearish engulfing candle, which I have highlighted, and a bearish early reversal indicator, that is one of our proprietary signals. And and you see this also here was a bit of a dip, and in here, the confluence that I'm looking at though, and I'll get to the current prices. I just want to show you this pattern because this is the exact setup we've been watching for the next market cycle top. So again, bearish engulfing candle, bearish ERI. Now our early reversal indicator kind of shows programmatic buying and selling, institutional buying and selling based on sort of the velocity of this happening, and some other things that we've layered into it. I won't go into that. But the other thing we watch for as a confirming signal is our trend strength indicator turning from green to red and getting below 80. So kind of standard oscillator rules. But that's sort of the third factor. And the fourth factor, there's really five. We have a signal indicator, which has turned when it turns from green to red, also bearish. That's a momentum indicator. And then one of our newer ones, this RSI Pro, which was showing bearish divergence, and this red circle marked the market cycle top in the last cycle and back in sort of January 21, November 2021. And this is also showing up on the total market cap. So I'm just reading the signals here, and let me just hide these so that it's a bit clearer and show you what's going on with this. I hate to delete these, but I can revert this back, I imagine, or I can just go into the object tree. Maybe we'll do that together. If you're not using the object tree, it's kind of a neat little tool. If you highlight one of the indicators, go under here and create a new folder, and then you can rename that. So I'm going to say sort of the bear market bull scenarios, for lack of a better term, with that. And then what we can do is drag these, highlighting them and dragging them into that folder. Then we can just hide that folder. So let me just do that real quick for us. So we have all of these curves in here. Where's the other one? I think it's all the way up here, all the way down in this range. So it takes a little playing around with, but what's it let's just do, I'll hide the icons there as well, the question marks. This will be easier to find and drag in there. And then all you have to do is click on this little hide button, and it clears that up for us. Still a little bit congested, so you know, I tell you what, let's do this. And with this arrow in there as well, and just drag it in, because I want you to see that these are looking very similar to that last market cycle high. And so there, now we can see that a little bit better. We've got a bunch of trend lines in here that I'll also drag into this to clear that up. Okay, so probably this one too. All right, so now we can see that. That's clear enough. Okay, so let me jump back out of this. And so showing you that we also have in this cycle, in this week, this weekly pattern, because of the sell-off last earlier in the week, we did bounce at one point back up, and this went away, but then it came back on Friday. So bearish engulfing, right? So I'll zoom out a bit. Back to that old cycle high, bearish engulfing. We have the bearish ERI. Again, that is called our early reversal indicator. I'm not here to talk about that. I'm just trying to show you that and make a case for why it might be prudent to take some positions off the table, not sell all of it, but have some cash handy to buy the dip when we do get down lower. The third indicator is this TSI is red below 80. The signal line, which I mentioned, is red, and also this RSI. I'm not going to talk about the lowest one, but the RSI showing bearish divergence and a red circle. So when we look at the total market cap here, what is also interesting is, and I'll hide these other ones, is the last time we had a bearish RSI on our indicator with this circle was the last time that fired was that market cycle high back in November 2021. So you know, it's just reading the tea leaves here. Also, its order block detector is one of our signals here, where basically it shows where a lot of the sell orders have lined up. And I realize this is the total market cap. I'm not sure exactly how that measures it, but it has been very good in the other indicators, and we're seeing some of that on Solana overhead too. So it does feel like we're in a distribution zone for the crypto markets. Not a good thing, not a bad thing, just a thing. And if we can buy back lower, obviously by the dip, then that's good for us. It's just, to me, it looks like we do head lower on Bitcoin. Doesn't mean we have to, but I trade probabilities and confluence, and that's what I'm seeing here, especially since we lost the fourth attempt at breaking this upward trend channel, this upward downtrending top channel, I guess you could call it. And it doesn't look like we're going to break out on this one. And we certainly could and hit that fifth breakout and then push up for a bit. But honestly, I think it's better if we don't. And we come back to this chart. Let me just pull back that object tree so you guys can see and put all those lines back on there. And so anyway, that's what I'm reading. I know it's a bit congested here. In terms of any other coins, there really isn't anything looking good to buy. I'd be looking to buy some bargains on the way down. A little bit of green here today. But based on what I've just talked about, I'm not seeing anything that's really worth buying. I have my eye on a few things, but I did want to just get this alert out to you guys. Again, on the daily time frame, it doesn't look terrible, but we have to keep a close eye on the 66K level. And if we close below that, specifically below 66K on Sunday, 8 p.m. Eastern, that would be tonight most likely if you're watching this, and then we're likely going to head back down into this 62K range. And again, if we lose that, I'm thinking 58K is the next buy block. These are buy orders that are on the order books. Below that, down to the 50-week EMA, and just pulling that up here so that you guys can see that as well. Again, I'm going to hide all those other indicators, right? So the 50-week EMA is this green line. And so just to sort of go full circle, make sure we're making a solid argument, the 50-week EMA has provided strength in the past. Back here when we were actually buying this market back in September of 2023, part of the reason was we had this nice launch off of the 50-week EMA. It also held here. I also, in my classes, I call it the ice, the thick ice. So when you're below the 50-week EMA, it's like you're drowning and it's hard to get back above it. Here it poked its head above the ice, came back down, and we just were drowning and drowning for a long, long time. Finally got above that 50-week EMA. So it's a significant line in the sand, and especially better when the 21-week goes above the 50. That's kind of universal for all time frames. I love the 21 and 50-week EMAs. So that's what we have for you. Hopefully that's helpful. As always, if you like the content, please like and subscribe to the channel. Leave a comment down below, and I'll keep you updated and get a video out to next week once we have a better idea of where we're headed. But I would, again, ideally, what I recommend with my clients, sell 10 or 20% if you're fully invested, to have some powder dry to buy the dips when the signals start to turn up. Not financial advice for you, it's just educational. If you're fine with holding and just hodling for the next 12 months. Maybe you don't want to do anything, but if you'd like to kind of lower your break-even and increase your profits in the long run, it's always a good idea, if you believe the market's going to go down, to take partial losses and to use that capital to buy back on the dip, kind of lower dollar cost average to lower your cost basis. So anyway, thanks. Hope you enjoyed it, and we'll talk to you again soon. Cheers.